And that was Federal Reserve Chair Jerome Powell wrapping up his first press conference of 2020 in Washington, D.C., seeing him walk away there, shake some hands. This follows the Fed's decision to hold rates unchanged. That is as expected. Powell saying that while the Fed sees signs of stabilizing global growth, economic uncertainties remain, including the coronavirus, which he said would likely disrupt activity in China and possibly globally. Powell also saying that he expects U.S. inflation to move closer to 2% over the next few months, while reinforcing the Fed's commitment to avoid inflation persistently running below that target 2% level. With me now to break it all down is my co-host Miles Udland, Yahoo Finance's Jared Blickery, and Nick Venditti, Portfolio Manager, Managing Director at Thornburg Investment Management. So, first one of 2020, no change, but the Fed boosting the interest rate on bank reserves and that getting some headlines. For people that have never even heard about that and think, all right, all we do is pay attention to the benchmark.
Yeah.
What is it and why is it important?
Well, members of Congress think this is the subsidy that the Fed pays to banks. But this
you want to get into that?
I mean, well, hey, that's how it gets described. I mean, this is the cash that is kept at the Fed by banks. This is the money that they get for that, right? So the reason the Fed cares about where the IOR is, as it is known colloquially, is because the Fed funds rate is in a target range. And so the Fed funds rate had drifted towards the lower end of that range. They want to push that back up. There was an issue about a year ago, Jared, or a year and a half ago, or was it the high end of the range? The Fed wanted to bring it back down. So the Fed funds rate is not at a fixed point. It floats in a corridor. The Fed from time to time has cosmetically tweaked the floor and the ceiling of this corridor such that it would get a Fed funds rate in the middle. So right now they want 187, or no, they want 167-ish to be where that effective rate is.
So just a little bit more background on the controversy. So that rate, the IOER rate, was above short-term interest rates for many years until quantitative tightening started a few years ago, and then it started coming down, and then it actually got below the Fed funds rate, and they said, oh my God, we got to fix this. And so it's all technical, but the argument, so they see the Fed raising that rate again, and is it going to be another subsidy to the banks? Is it going to be above market rate? I don't think it's going to get there because the Fed has been a little bit stingy as opposed to generous when it comes to liquidity. They're providing enough, but they're not overdoing.
But I think this does get to the core question of today's statement, or today's press conference, which is all about what the Fed is doing with respect to repo markets, right?
Because there's nothing else going on.
Their bill purchases, and I think that, it was continually asked, is this QE, is this not QE? Nick, certainly you guys have gotten a lot of questions about this, where the Fed is at with their policy. I mean, Powell has said it till he's blue in the face that it's not QE, but certainly the market is taking some kind of an easing signal from the Fed's involvement in the repo market.
Yeah, absolutely. That's absolutely true. I don't actually think it matters whether or not it's QE. As you mentioned, Powell would vehemently defend the actions as not QE. But by virtue of us having this conversation and him being asked the question several times in the press conference, clearly at least some portion of the market views it as QE. And when they ultimately decide to roll this back, will it have the same impact as a taper tantrum from several years ago?
That's a big one.
And then I think it leads to, what we're seeing right now in the stock market, right? We've seen a little bit of a lightening up as Powell has spoken. And Jared, I think we're probably on the same wavelength here. Him even mentioning that the stock market seems elevated in its valuation.
Somewhat elevated.
I mean, at this point, Powell even acknowledging the stock market is probably enough for people to get
that didn't happen.
Right?
That didn't happen in years past. I would say Bernanke, Yellen, and even Greenspan probably studiously avoided saying anything or even mentioning the stock market, but it's the third, it's a fourth mandate, unofficially, definitely. Now, I was watching the tape, and we got a sell-off right around 302 to about 305, so I was looking at the headlines from that time. He was talking about, and this is kind of strange to me, the public has every right to expect the Fed will assure the financial system is robust when it comes to climate change.
Yes. I thought this was so interesting in this whole press conference is that it was either super in the weeds, like repo and IOER, because we knew that nothing was changing really in terms of the benchmark, or it was these really kind of big swing questions on climate change, right? Like that, because people had time and people are trying to write a story. Now, and it is an important issue. I mean, they have not signed on, as 40 other central banks have, to the greening, which is pointed out. So I think there was like some sort of mainstream stuff that was brought up, and then this like deep, wonky stuff that I'm sure you and Miles were really excited about.
Yeah, and it's sometimes hard to pinpoint the headlines that cause certain things, but he was also talking about trade right after that. And how trade risks remain elevated. That could have contributed to it, but I thought the climate change thing was pretty interesting.
What did you think about the coronavirus part and global economy? He brought it up first off in his prepared remarks. It came up, then there were more questions on it coming in. I mean, they say they're closely monitoring it. I don't know what else we can expect from him, but do you think it was interesting at all in terms of how he couched what they're doing?
I don't know that it plays that big of a role, at least right now. I mean, not to minimize the impact of coronavirus, but the flu is going to kill more people in this country this year by a wide margin than have been impacted by corona to date. So, you know, it's got to be something he mentions, I think, by virtue of the fact that it's a huge story. But ultimately, I don't know that it has that big of an impact on certainly our domestic economy and maybe even China's as this plays out over the next couple of weeks.
As Jared mentioned, talking about and fielding questions on climate change, and part of to kind of go to what you actually do in your day job, managing the muni portfolio over at Thornburg, like you guys were talking about, in your note today, looking at ESG as a real factor and something that people are asking you about and makes sense for that investment space. And as part of the broader conversation that I think the whole financial world is having after Davos, it seems like these concerns about ESG or climate change and how all that fits into an investing framework are not going away. It would seem to now be a regular fixture of, maybe it's not every meeting, but certainly some meetings the Fed is going to be asked, how are you guys thinking about climate change as one of its main kind of areas that it's focused on?
Yeah, I think so. Look, it's becoming a bigger deal, certainly in the investment community. Although, some of that might just be marketing and some of it might be in my space at Thornburg in the municipal bond space. Most municipal bonds qualify as ESG by virtue of the fact that they fund healthcare and education and all of these things that certainly check that box. So as we move forward, from an investment standpoint, I think it's very important that investors who feel strongly about ESG, who want that kind of solution, do their due diligence on exactly what's being provided to them by these managers who are sticking these labels on products.
Nick Venditti, portfolio manager at Thornburg Investment Management. Thank you so much for coming and listening to Chair Powell with us and giving us your thoughts.
Absolutely. Thank you.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.